Welcome back to TechKidFX for another Hbar price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Hbar chart, which has continued to hold above a key area of support at around the $0.0639 mark. We have also continued to hold above the 20-day MA here on the 4-hour chart. On the daily chart, we have also continued to obey the ED12 structures. And before I give you my next price targets and also the short-term and the long-term scenarios that I'm expecting to play out, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the daily chart by first giving you a recap of what has been happening and also give you the long-term scenarios, where you can see that Hbar, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $0.58 mark in what I'm terming as that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing low prices in this ABC corrective structure, which took us back to around the $0.0356 mark in what I'm terming as that second wave to the lower side. And on the long-term scenarios, whatever we expect next after seeing the formation of this wave 2 is a bounce to the upside in the formation of that wave 3, and I have a target area to the upside in the formation of that wave 3 at the fib level 1.618, and that perfectly lies at around the $0.9768 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do before we can expect a wave 4 and then push even higher in the formation of that wave 5. And jumping to the 1-hour chart to give you the short-term scenarios and also my next price targets here on the Hbar chart. Here on the 1-hour chart, you can see that after making our low at around the $0.0356 mark, we started a very nice bounce to the upside, obeying the ED12 structures, where you can see that we have seen the high for that wave 1, then we have retested in the formation of that wave 2, we have also seen the high for that wave 3, we have also retested in the formation of this wave 4, and I believe that whatever we are seeing at the moment could be the start of a bounce to the upside in the formation of this wave 5. And by first showing you that the fourth wave right here has done the minimum that we expect a fourth wave to the lower side to do by connecting the Fibonacci's from the low of the second wave to the high for that wave 3, that gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and it is within this red target area that I was expecting to see the low for that fourth wave. And after seeing the low for that fourth wave, whatever we expect next is a bounce to the upside in the formation of that wave 5, and I believe that is what is playing out. And yesterday we saw a massive bounce to the upside, which gave us a break above the 20-day MA, which we are still holding here on the 1-hour chart. And there are chances that since we have the support of the 20-day MA here on the 1-hour chart, we might continue pushing even higher, get back to the key area, that is the high that we made in the formation of that wave 3 at around the $0.0808 mark. And once we manage to break above that high, then that will be enough confirmation that we might continue pushing even higher to fully maximize our target areas to the upside in the formation of this wave 5, and giving you a target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high for that wave 3. That gives me a minimum target area in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.0872 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do. And once the wave 5 plays out, then we can name this 5-wave structure to the upside as a larger ED12 count 1, and whatever we expect next after seeing the formation of a larger ED12 count 1 is a corrective structure in the formation of a larger ED12 count 2. And once the wave 2 plays out, then we can be able to ride another bounce to the upside in the formation of that larger ED12 count 3. So that is what I'm expecting here on the short-term scenarios, and we need to continue watching the 20-day MA and also a key area of support at around the $0.0665 mark in case we continue pushing even lower. But in case we continue seeing higher prices, continue watching the key area, that is the key high that we made at around the $0.0808 mark, which is the high for that wave 3, because a break above that high could trigger even higher prices to fully maximize our target areas in the formation of that wave 5. And also taking a look at the indicators here on the RSI, we are trading at around the 59 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. Also taking a look at the MACD, we have been able to print a bearish cross, and that does not fully support the formation of that wave 5, and that could mean a short-term bearish movement before we continue pushing even higher. So let's be patient and see how that plays out, and I'll be keeping you updated.